Stock investing and stock market predictions from October 1st to October 17th. 13 trading days, I made over 17,400. So it's more than 1,300 a day. That's pretty good, right? And does anybody want to make money like this? I'm gonna teach you how. So subscribe this channel. So today we're gonna talk about what happened in the stock market last week and what could happen in the stock market this week. And there's gonna be 10 companies reported earnings this week, and which companies do I like the most? That's what you're gonna know today. Welcome to World Traveling Millionaire Stock Investor and Option Trader channel. S&P 500 the past 5 days fluctuated. It did not move so much, but luckily it did not close down because Friday it went up. Okay, so year to date is up 13.55%. 5 years 92.3%. So this is a number that I want you to remember, because when we compare companies, right, when we look at companies, usually great companies, they beat S&P 500 over the past 5 years. But that doesn't mean that all the companies that beat S&P 500 over the past 5 years are great, okay? But usually they tend to be great companies. Nasdaq, the past 5 days, it barely moved, and year to date, 17.63%, better than investing in real estate. 5 years, 96.39%. So it's more than S&P 500 when the stock markets are good. When they go down, Nasdaq tend to go down more than S&P 500. Dow Jones, the past 5 days is up because investors were afraid of US-China uncertainty, so they try to put the money into consumer stable and healthcare rather than just in AI and technology stock. So that's what happened. Year to date, 8.96%. 5 year, it doesn't beat S&P 500, like 62.01%. So what happened in the stock market last week? Federal governors, they spoke about it, but the data did not come up because government shut down. Okay, so there was no data for CPI, there was no data for producer index. Friday there was no data for import price index, no data for housing stock. JP Morgan, the past 5 days it went down a little bit, 2.76%. They paid dividend. Goldman Sachs, it went down a little bit. BlackRock, it went up after they reported earnings. CD, they went up. And Bank of America, it went up 4.23%. That must be pretty good. The bank stock, they usually pay dividend. So for retirements, banking, I'm okay. Okay, there are some stocks that I could buy. I could use options. I could set put options to generate incomes. But if you want totally passive income, dividend should be one of the ways to go. So financial, not bad. Okay, this is not financial advice, but if I were you, would I invest in financial if just want dividend? Yeah, I would. Morgan Stanley up 2.49% the past 5 days. TSM, it went down. They reported great earnings. They also raised their guidance, but it went down. Why? Because the past 1 month is up 11.41%. The past 6 months is up 99.57%. Year to date, it's up 46.28%. 5 years, it beat S&P 500. So it's no surprise that TSM went down, okay, on Friday and the past 5 days. It's just a little bit pullback. It's good for the stock. Mega Express, it jumped the past 5 days, 8.37%. After they reported earnings, it jumped over 7.27%. It must be pretty good, pretty good. So how about this week? Do we have anything interesting? Data, federal governors, they're gonna be sleepy about it. Data not gonna come out unless the government opens tomorrow. Monday or Tuesday. I don't think it's gonna happen pretty soon. CPI, core CPI, Friday. I don't think data is gonna be available pretty soon. So I think most likely President Trump and China, President Trump said they are already reconciled. I think more good news could come out next week. So, earnings come out. So, most likely stock market could be up next week. Stock number 10, Netflix, year to date up 35.26%. 5 year, it beat S&P 500. Look at this, 145.63% compared to S&P 500 of 92.3%. So Netflix definitely beat S&P 500. That's number one criteria, it passed. Number two, has it been in business for at least 10 years? Yes, Netflix was founded on August 29, 1997. So at least 10 years. It meets my second criteria. Third criteria, has it been a public company for at least 5 years? Yes. So it meets my criteria for number 3. Number 4, do I like this business? I'm starting to like Netflix business now. Okay. Number 5, financial statement, balance sheet, are they good? Yep, I think most likely it's gonna be good. So I'm thinking about buying Netflix only if it gets any value. Now I think it's overvalued. I would like to pay 800 for that Netflix. That could be really good price. So I'm gonna keep looking at it. If it drops, I may buy. Okay, this is not a financial advice. Okay. Stock number 9, Radius is a weapon manufacturer and also industrial manufacturer. So Radius technology 36.15% year to date up. The past 5 years is up 152.4.5%. The past 5 years it beat S&P 500, but I don't really like this business, so I'm not gonna buy this one. Okay, if somebody knows that tomorrow there's gonna be World War III, this stock could go up because they manufacture weapons. Okay, other than that, I prefer not to own weapons manufacturers because there is a high cost, and over the long run, AI and technology companies, they beat S&P 500 and also they tend to beat these companies. So that's why. Next one, Lockheed Martin, I traded call option. I took the profit, around here, that I sold it around here. Year to date, 2.67%. 5 year, 32.28%. It doesn't beat S&P 500. But if it gets really undervalued, I may be interested. Around 400, yeah. Below 400, I may be interested to buy. Next one, General Dynamics, the same. Weapon manufacturers and industrial. Year to date, 26.87%. 5 year is beat S&P 500. Yeah. If you are really into weapon manufacturers and industrials, you know what, these could be great companies. You just need to look at their financial statement. Make sure that their revenues are going up, net incomes are going up, cash flow are positive, okay, over the last 5 years. So year to date. Okay, next one, TSLA Instrument. This is a chip company. Not all chip companies are great, okay, because this is analog, so when it goes down, 5.55% year to date. 5 year, it doesn't beat S&P 500. Look at it, but it has a strong support around 140, 150. So if it goes down 140, 150, most likely we could make money. Okay, it pays dividend 2.22. Definitely for retirement. If I don't want my portfolio to fluctuate so much, this could be a good company to add. Tesla, year to date, 15.83% up. 5 year, look at this, it beat S&P 500, but I'm not going to buy Tesla. I don't really like because it's a car company for now. Okay, but you can think about it if you want. Next one, TMO. TMO is a healthcare. Once healthcare pick up, this could be stock that could keep going up. Now it's AI technology term, right? I think next year probably this may be this healthcare term. It doesn't beat S&P 500, but if it turn around, this could be one of the great companies to buy. That's what I think. Okay. Next for Intel personally, I don't like Intel business, but because U.S. government wants to take a stake in Intel and NVIDIA also invest in Intel, so it's now at 82.04%. But 5 years, it doesn't beat S&P 500. I don't need to buy. Next one, UMP. This is good for retirement because it's a railway company. Okay, and the past 5 years it doesn't be S&P 500, but hey, for dividend, yeah, good company. Researching, proof, great company, great economy. It doesn't move so much. That's one. Next one, Honeywell Indonesia is an industrial company, down year to date 10%, 5 year down 15.62%, up 50.62%. I'm not going to buy this one. Okay, so which one do I like the best? That will be Netflix. Netflix is the only one that I'm interested in buying next week. That I'm going to be keeping my eyes on Netflix. Okay, which stock do you like the most? Comment down below. If you want to learn more, go to Master Rich Stock Option Crypto. Go to playlist and check out more. I will see you